Hello everyone, welcome to this week's edition of the Fibonacci Review. Today I'm looking at the Hang Seng Index. This of course is the top 50 stocks out of Hong Kong. And it doesn't matter what market it is or indeed what time frame you want to use, you'll find that these natural harmonic numbers exist in the stock markets, trading markets, commodities, futures, bonds, currencies, simply because human beings trade them. And we have this inbuilt code within us. All we need to do is to apply this to any chart you want to look at, and you will find some fabulous support and resistance zones. And then, of course, when the market reacts to those support and resistance zones, you know why it's doing it, and that should give you the confidence to put a position in play and make a profit from the resulting move. What I'm going to do here is to look at the long-term weekly chart. So we're going back quite some time. There was a significant peak here in Hong Kong in February 2021. The market fell back significantly till November 2022, and it's been in between those 2 points ever since. And this, of course, gives us a fabulous place to anchor our Fibonacci tool from. So all I need to do is to go into my set of tools up through here, find the Fibonacci tool. I'm going to anchor that to that major peak in 2021, bring it down to the major low 2022, and we're going to divide the distance between the top and the bottom into these Fibonacci ratios: 23.6, 38.2, 61.8, 76.4. I've always included the 50% level because that is again level, and he told us to watch this level very carefully because it can produce significant reversals. And today we're going to see a classic example of that. Now, as long as the market is above this low and below this top, all we simply need to do is to drag this across to the right-hand side. And when we do that, what we can see is that the market got very close to halfway back to the previous top after the low formed. It's formed a triple top here, so that's probably why it missed it. It got some very significant resistance here around 22.5, and then it went through another serious decline here until February 2024, and the market started to move back up. Now again, in through here, what we can see is it's retested the 50% level. And this time again, it just could not get through that, had a very strong decline out of that, and came back to the 38.2, danced around for a few weeks, went underneath it, then used the 38.2 as resistance. Now, when I see the market is in a downtrend, we've got a top, a lower top, this would be a third lower top, and the market is using a Fibonacci level as resistance. What we then see is that it went from 21,000 all the way down here to 18.5, which was very close to the 23.6% level, and then all of a sudden found its support and started to move. Now at these key turning points on the weekly chart, you would be drilling down to the daily chart and then looking for the patterns, the signals, the tools, the techniques, and the strategies that you love to use in your trading. But you know that there's every likelihood when it shows a reaction at these Fibonacci levels that it could produce a elongated or a long run that will provide you with the opportunity to make some profit. So all we need to do is watch what the market does when it gets to these levels. I hope that makes sense for you, and of course any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Fibonacci technique in trading. Bye for now.